Caroline.
Thank you so much, Leanne Goins with the World News. Now it's time for our weekly deep dive into property. For more, here's Bloomberg's Sandra Kilhoff with Property Portfolio. Sandra, this week you're looking at demand for commercial real estate in the wake of the pandemic. Tell us more.
Yes, Caroline, because with the UK now inching towards reopening, investors could unleash a £45 billion wave of spending into the London office market. That's according to research from CBRE. Their data showing that the city offices, global equity intercity offices, could reach the highest volume since they began tracking those volumes in 2012. So for more, I am very pleased to be joined by Alastair Carmichael, Investment Director at HB Titan. Alastair, good morning to you. I'm so keen to have you on the show this morning because HB Titan launched just this Christmas. You're a hybrid investor, lending and buying across the capital stack, but you're particularly keen on offices. Why do you think there's such a big investor interest in this right now?
Good morning. Yes, we launched just before Christmas and we were fortunate enough last year to raise £1 billion of discretionary equity from a short list of private investors. And as you rightly say, we have a very strong appetite for two sectors in particular, albeit we can look across all real estate sectors. Offices and hotels are two areas of significant interest to a number of investors, but areas that have been fundamentally impacted by the COVID pandemic. That has obviously led to structural changes in a number of sectors, most significantly in the retail sector, but we have also seen a massive impact, obviously, in the hospitality hotel sector, where hotels have been shut for long periods of time, significantly impacting liquidity and cash flow for those businesses. Offices, to a greater or lesser extent, have also been impacted by COVID and accelerating some structural changes that were already happening. I have to say that were driving people towards more flexible working practices. Those working practices meaning people working from home more, but also working in different ways and from potentially different types of offices. But we think the impact is most significant in the hospitality sector.
Yeah, I'll get to hospitality in just a second, but I do just want to ask one more question on offices because, I mean, what assets is it that investors really want to get into in the office space? I mean, the CBRE really seeing that we could have a massive wave of money coming into the London offices, but if everyone is continuing flexible working for the foreseeable future, if that's the new normal, then where's that money going?
Yeah, so we don't believe that the death of the office is nigh. We believe that office practices were changing and the pandemic has accelerated those changes to some extent. But I think in terms of where the most opportunity lies, there is certainly going to be significant appetite for lending and acquisition of assets, offices in locations where there's a depth of and deep structural demand, where they're affluent areas, be that around mainline transport hubs in city centre locations in London, Manchester, Birmingham, where they can draw on commuters in more peripheral locations, likes of Woking, for example, or indeed in flexible working spaces where people are going to be over the last few years.
Okay, so that's actually really interesting, Alastair, that there still is quite a lot of potential in the office space, and I'm very interested to hear that you don't think the death of the office space that had been called by some people is in fact what is happening right now. Let's move on then to retail. I mean, you did specifically flag hotel assets as another particular point of interest for your investment space. Explain your thinking there.
Yes, so hotels have obviously been significantly impacted by the pandemic with a massive reduction in the occupancies and in most cases the hotels remaining completely closed for long periods of time. What that has led to is institutional and mainstream investors and lenders withdrawing from the sector, either completely or pausing and holding. So it's created.
The Jeep Celebration event is here. Right.